Hey, good afternoon, everybody. Going to go over our Forex trades for today, Wednesday, August 5th. Just had one trade. There was a ton of economic news this morning, so we didn't get a chance to do any scalping. We had one scalp last night. They were close to a couple of setups for a few other trades, but they just didn't get triggered. The one we had is what you're looking at here. First, let's just touch base on some of the economic data this morning. The first one I wanted to point out was, well, first we have Atlanta Fed, the president of the Atlanta Fed, Lockhart, saying that it's going to take significant deterioration in the economy for him to not support a rate hike next month, the month of September. His opinion is especially notable as he's considered very centrist, like in the center of the FOMC people. And his views are typically a mirror of the consensus of the FOMC. To us, it's absolutely insane to raise rates because the economy and say the economy is the reason. The economy is so strong that they need to raise rates. Let's get off their high horse. Let's take off the rose-colored glasses. Let's admit the economy is not strong. Let's admit that QE only stabilized and didn't create jobs. And let's admit we want to raise rates to get back to normalcy. And if we raise rates, the economy, it may take a little deterioration. It may create deterioration in the economy. You may get a little pullback in the stock market. But if they do it, as they're claiming, in a very conservative manner, I think that will ebb and flow and take its way out. And as rates rise, we'll eventually get the economy to pick up, which is absolutely the opposite of what normally happens. Normally, the economy gets hot, you have to, or the economy, you lower rates to stall the economy, right? We're of consensus if you start to raise rates, you're going to alleviate the electronic risk that banks are willing to take now, and kind of force their hand. It's not going to happen overnight. Over time, force their hands to start to take real risks. By that, I mean doing more business with municipalities, different government agencies, different companies, corporate levels that want to float bonds to do investments in different things, whether it's product development or to do some whatever they want to do, some work into town, build the school, the roads, whatever. There are companies out there that want to do that. There's municipalities out there that want to do it. They want to take advantage of very low interest rates. The problem is that there's not a lot of demand. The bond market's one of the biggest markets in the world, right? So in order for you to create demand, you need to increase the yield. If the yields get increased, you'll have some more capital flow. Therefore, since there's no demand, the banks have backed away from really wanting to get involved. Of course, they're doing some underwriting and whatnot in these type of products, but they're not doing it in the capacity they used to do it when a 10-year piece of paper in a municipality was issuing 5.5, 6, 6.5, 7% yield. A 10-year piece of paper now is you're looking at a treasury 2.2, 2.3. Okay, maybe a municipality 3%, 3.5%. If you're lucky, 4%. I mean, come on, let's be real. So what the banks are doing now is they're diverting all their energy away from that. They're taking electronic risk, financial engineering, electronic risk, and they're moving capital around different places, but they're not creating jobs. If you start building schools or doing additions to school, renovations in schools and roads and this and that, a company is doing product development, they want to create a new product. This all creates jobs, but what they're doing now, since they're not doing that in a massive scale, they're not creating jobs. So that's what QE did. QE only stabilized the economy, did not create jobs. If the Fed would just say the economy is not good, and we need to raise rates to normalize them, it would be much better than trying to fool everybody and say this economy is so strong. More data points came out this morning. Okay, that was Lockhart's comment. Other data points that came out this morning. ADP jobs number. Okay, it's not a huge number. It's not like this Friday's non-farm payroll, but it's big enough to watch. It came in, it created 185,000 jobs. Estimates were 215,000, missed it by 30,000 jobs. In the manufacturing sector, just 2,000 jobs were created. Only 2,000 of that 185,000 were manufacturing jobs. What was the biggest sector? Bartenders and waiters. So we're trying to build an economy on the back of bartender and waiters. Are you absolutely kidding me? The higher prices go for because of inflation, because of God forbid they raise the minimum wage. Who's going to be going out to dinner? Upper middle class and wealthy. Middle class, they'll get squeezed out. They wouldn't even be going out to dinner, and forget the poor. They don't go out to dinner as it is. The restaurants will start closing down. Now you're going to have a real where are you going to build your economy on now? The bartenders and waitresses aren't even going to be around anymore. So on top, I can keep going forever. On top of that, you got some certain municipalities in California raise their minimum wage to $15. McDonald's is already testing kiosks and computers and robots to replace many of the workers. Not all the workers in a restaurant, but they're testing where people could go in, order their cheeseburger, order their hamburger on a touch screen, and instead of talking to a person and telling them what you want, the computer does it all. Maybe a few robots in the back there, and you have one or two people in the back, one or two people in front, make sure things moving slowly. You got three or four employees in that one location compared to maybe 10 or 12. You'll see what happens with higher minimum wages. Of course, when that bad news came out, futures went higher because the market's telling the Fed not to raise rates. The market's telling the Fed it either wants more QE or it's going to want the Fed to start to admit things are not good. Okay, now on top of that, we get ISM non-manufacturing, which actually beat. Okay, the ADP number was the worst number of the year, and now the government is trying to tell us that ISM non-manufacturing is the best. It's the biggest on record, not the best of this year. It was the biggest on record. ISM non-manufacturing was the biggest on record after that terrible ADP jobs number. You just can't make this stuff up. It's impossible. So that's all I have to say on the economy. Let's get to the trade. One scalp trade in New Zealand dollar, Japanese yen. We were short this 81.219. Kind of went against us a little bit for a while, maybe an hour or so. Scalps, you're really hoping to hold them to get involved, you know, and not be in them that long. But it went against us maybe for about an hour or so. Finally broke down. When we finally got a little bit of profit, we covered, picked up 2.3 pips. You can see what it did. It came after we covered. It actually came down to about 81.12, 81.11 on the bid side. Call that 81.14, 80.15 on the offer side. So another 4 pips there for sure. And then several hours later, I mean, we were in la la land by this point, sleeping away. It came down to 81.09. So if you were in this with us, you had a chance to cover and make more than we made. But we'll take the 2.3. It's a full scalp, so you're trading, with decent leverage on those. So that's it. We're going to wrap it up. If any signals come out, they'll be coming your way. If any news breaks, it'll be coming your way, I'm sure. And if you're trading now, good luck. We'll be back tomorrow, assuming we get some action.